The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
From TFNN, welcome to the July 17th fantastic Friday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary weekend. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I, when we recognize that, when we go ahead and embrace that, it means we can find the gift in every set of circumstance that life is going to throw at us. That's really what the rules, that's the law of life out there. Of course, the law of the markets are for the bulls and the bears, the buyers and the sellers, to go ahead and throw things to us as well. Today, you and I, we're going to go try to figure out what all that means. I'm absolutely grateful for your presence here today, and I'm here to serve you. So feel free to pick up that phone, dial on in at 877-927-6648. This is going to be a special show, folks. You're going to want to stay tuned here. Of course, internationally, 727-445-1044. I'm going to reveal to you, yes, I like that, too many secrets. I'm going to reveal to you one of the market secrets out there. In fact, I saw that movie I think it was last week, The Too Many Secrets. What a great cast of characters that's got in it. Robert Redford, Dan Aykroyd, what's the other guys? So many. What a great movie that is. Marty, right? Marty was the guy's name. In any event out there, it is Fantastic Friday. This is Tiger Financial Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading down 62 points, trading at 18,056. The S&P is off 2 points. She's trading at 21.22. NASDAQ Composite up 25 points, trading at 51.88. Russell is down about 9, trading at 12.64. Gold's back $10 right now. She's trading 11.33. Silver's off 10 cents at 14.87. Natural gas is up just slightly here. Google, though, that's the big mover. Now, the cool thing about Google, and longtime listeners know that I've shared this with you in the past. If you go back and you study the Google chart and you study what takes place after earnings, whichever direction it is, Google continues in that direction, typically for quite some time out there. It's the one stock that with regard to the way that it responds and reacts to earnings out there. So for all of you that see Google up here gapping up today, think that what you've got in Google is going to be an island reversal or something like that. I've got news for you. Go study all of the other quarterly releases out there. And you're going to see a pattern that is really very cool to play out there. But that's not what we're going to spend time on and take a look at. It is up $93. Priceline is up 26. Rapid 7. I guess that maybe is that Red Hat? REDH is the dash REDH. I don't know, up $9 out there. Baidu's up $9. Tesla's up $8. Illumina up 7. SolarWinds down 10. Domino's Pizza, I guess they're having a discount sale. They're off about $4 right now. And let's go take a look at the markets. We're going to start off by taking a look at the QQQ series ETFs. What do we have? We've got a call already. So we're going to, instead of doing that, let's go to our caller. Let's go to Stanley, who's calling us from Maine. Are you calling us from Maine?
Mid-Coast Maine, yes.
Hey, very cool. How's the weather up there this summer?
Today is delightful. We've had been very dry, but today it's just gorgeous. When you get into that Canadian air coming down, it's a wonderful thing.
Now, is this where you live year-round, or do you just go up there for the summer, or?
This is where I live year-round for the last 8 years.
Oh, that's really cool. That's great. That's great. Well, glad to hear that you're having nice weather. Now, are you a lobster aficionado?
Well, yes. Since
well, you got to tell me, what's the best way to prepare a Maine lobster then?
Well, just boil it and make lobster salad out of it, in my opinion, you know.
Okay, all right, and, that sounds good.
Yeah, no, if you can make a good lobster salad, it's just delicious, you know.
Yes, yeah.
I mean,
Oh,
they're
I
good.
love.
They're good boiled and dragged through butter, but the lobster salad allows you to introduce some, other stuff and into it that jazzes it up, But
Yes, there's a restaurant in Orlando called Charlie's Steakhouse. It started by a guy named Charlie Woodsby. He and I gotta forget his partner's name. They're the two guys that actually started Red Lobster. And he held on to his Charlie's Steakhouse, but the original one that's on OBT Orange Blossom Trail out there, it's so old. The smoke, the grill's got all that beautiful old flavor to it. They take big old lobster tails, and they put them on the grill and they're smoked. And to me, I think it's one of the best tasting.
yeah. Well, it's hard to do lobster badly unless you're really a nitwit, But yeah, I can see. I have never done a lot of grilling with them, but I can see how grilled would be delicious. So.
Oh, it's amazing. I used to have friends that would come down from Japan. And to visit, and of course, they're so used to eating the Kobe beef, which is sliced so thinly. They like to go out for big, juicy, meaty, American steak out there. And I would take them to the steakhouse where they have just simply great and huge steaks, and I would order the lobster. And sure enough, every time I would entertain folks from Japan, we would be going back like the next day or the day after. They would taste that lobster and they would say, "The heck with the steak. We want that grilled lobster."
Yeah. Apparently, around Christmas time, they air freight a ton of New England lobster to Europe because it's become a Christmas tradition over there. So I guess people around the world enjoy it too,
Very cool, very cool. Okay, well, look, we're making everybody hungry.
I know, you started it, not me.
I did. I take responsibility for that. Let's see if I can recoup now. You wanted to take a look at the energy sector, the XLE, is that correct?
Or XOM. I just noticed there's like a little bounce happening today, and I wondered if it was a fake out or it could have some juice to it. And when I come down to visit you and Tom, we'll have to go out for grilled lobster tails.
Hey, there you go. There you go. In the case of, so you bring up, folks, so what Stanley's bringing up is the energy sector, and he also asked about ExxonMobil, XOM out there. And if you're going to trade one, you certainly have to pay attention to the other out there because ExxonMobil represents a significant portion of the weighting inside this. It's down today with 7.8 million shares, and I'm referring to the energy sector, the XLE, and it's trading into a swing point that's got 52 million shares. So if you were looking to take a trade on this, I would think your best bet would be to let it test the low of that swing point from January 14th, 71.70. Do it on lighter volume, reject that area, and then you could consider taking a stab at it. You're trading inside that swing point, and I think that would be just as a look at it as we speak right now. I want to take a look at the weekly chart as well for you. So as long as we're inside a swing point, let's see what kind of volume. Now, what's nice about the weekly swing point out there is that also happens to be a hammer candle. And that had volume of 199 million shares. We're nowhere near that kind of volume this week. We're at 55 million shares as we speak today. So ideally, you would see a test of that level, 71.70, see it close above it, and then you could take a stab. It may find resistance at around the $75 to $76 area. That's what you would want to see it clear in order to tell you that maybe there's a change in trend in place. And let's just take a look at ExxonMobil, too, just to see what it's doing. And then we can go back. If you've got some questions, I'm happy to try to answer those on either of these, either the ETF or ExxonMobil. In the case of ExxonMobil, it's not going to make it easy for you because it's not down into it's a swing point right now from June the 4th. That's the swing point that it's really trying to line up, and it hasn't tested it. The top, and so maybe at the test in the XLE is the bottom that we looked at the swing point, and maybe the test on ExxonMobil is a test of this June 4th area, the high of which is 81.23. That's got 95 million shares. So ExxonMobil is pulling back into that area with light volume. Yesterday was 58 million shares. Today's a little bit heavier because it's 116. It's already got 41 million shares. That's my best read on it as we speak right now. Is there a reason that you're focused in on a long position inside the weakest sector out here, let's say, or one of the weak sectors?
Yes, because I'm older than dirt, so I'm looking for some dividends, but I don't want to buy into something that's really high right now. And, so I figured I'd go fish around. I look at Kinder Morgan too, but then I look at their debt load and I get shied away from them. But I think if you're going to hold ExxonMobil or the XLE for like just pretend an eternity, 3 or 4 or 5 years, I think you might come out right. But I would run it by you and Tom to get the story.
Well, ExxonMobil, yes. I think you're probably better off playing ExxonMobil as opposed to the entire group from
Okay.
that standpoint.
Yeah.
I would think that would make sense. In the case of that sector, though, which is certainly going to be influenced by crude prices, amongst other things. And the reason why I say ExxonMobil is because, look, I haven't looked at their balance sheet lately, but I'm pretty sure they're flush with cash.
Yeah.
So that makes a lot of sense out here. ExxonMobil actually could fall. I have a monthly chart that I posted on my screen for you, and there's really nothing at this stage here. It says its next test for you is going to be 77.13. Which is the swing point low from June 1st, because it's trading inside that June of 2012, by the way. It's trading inside that swing point right now. We've seen no reversal at all.
Okay.
So I think it's two different animals there.
All right.
Yes, the energy sector, you want to pay attention to it because of, and you want to pay attention to ExxonMobil because of its weighting structure there. But the energy sector, I think, would be a trade. ExxonMobil, I think you're looking at that as more of a longer-term investment. That's just my take.
Yeah, okay, so Exxon would be longer and XLE would be a trade. But so in your opinion right now, I'm still trying to catch a falling knife, yes?
Yeah, because we have not seen a reversal. It's in the middle. I mean, look, it can always reverse and turn at any point in time, but there's not any signal that it's provided to you or I that I can see of any clear signal today. No sign of strength. No, nothing really.
Okay, that's why I'm on the phone.
Oh, perfect. Hey,
Well,
it's been great to speak to you. Thanks so much. Have a great day, and thanks for sharing so much.
Thank you, and
with us.
for everybody at the Tiger Financial News Network, because you guys are the best. I've been listening to Tom for 300 years, and
you are older. You are older than dirt.
Yeah, almost as old as Tom. Oh no.
Oh man.
It's just nice how he's broadened the whole format out, and there's lots of different opinions, and it's very helpful, because there's a lot of fabrication going on out there, and it's
we each of us do give you our honest opinion, that's for sure.
Yeah.
Now the good news is that age, we won't reveal what that age is,
Right.
but that's the new 30, so you're in good shape.
cool.
Okay.
Hey, nice
Thanks so much for calling. Have a great day.
Thank you so much.
You bet. All right, folks, we got the Dow. She's off 64. S&P is down 2. The composite's up 26 points. And we get back from this break, I'm going to reveal something to you that for most of you probably will blow your mind. It would probably blow Tom's mind, too. So maybe he's listening and he'll take a look at it. This is Steve Rhodes with TFNN. We'll be right back, folks. Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 65, S&P's down 2 points out there. So let's take a peek in here. We're going to start off by taking a peek in at the QQQ series ETF. Obviously, key here is the fact that we got the nice gap up this morning. Of course, that was brought to us by Google out here. Yesterday, though, the Qs finished above a consolidation. Remember when the price came down here on the trading day and formed that hammer candle back on July 7th? All that it was doing, even though it came down with volume back there was 44 million shares. Even though it came back to that level, all that it was doing was just simply completing was signaling to you and I that there one of two things was going to take place. We were in a consolidation pattern. You couldn't bust them down. When I say consolidation, because what we really had going on, if you take a look at the stock chart here of the Qs, you have that high from April 27th and then another high on May 27th. And that should have been the signal that maybe there was a double top. Most people would look at it and say, hey, that's a double top. Now, I would say it's a potential double top, because the only way a double top can be confirmed is you've got to be able to bust out the low, which never took place. In fact, price got down only to test the Qs, only got down to test the top of that May 6th. And then what do you have? If you got price that gets up here, a couple doji candles on June 22nd, 23rd, a little key reversal day, June 24th out there. Price does what? Moves all the way down to the bottom of that swing that it needed to break out. That's the May 6th in order for the double top to actually have been a double topping pattern. Right, so I'm teaching you something. This is not what I actually am going to share with you, but this is the prelude. This is our foreplay. This is what I've got to do in order to be able to get you there. Well, that's a loaded line, and I didn't even tend to anything there. But let's just take a look. There was a triple top out here. Price came down, formed that hammer candle on July 7th. That actually confirmed more than anything else that we were in a consolidation pattern because the market could not bust that out. So that's one of two things were going to happen. Prices were going to go up to their highs. So just so you know, when I had the conviction in my voice that the markets were going to be making, although this was before this, and then the markets did this for you and I and got down to that bottom, couldn't bust it out. We knew that it had failed as far as a double top. We now know that it had failed as a triple top. I was able to easily say to you, the market is going to get back to its highs. At least we were taking a look at the NASDAQ composite. That's what we were focused on during that conversation. And sure enough, it did that. It broke through those highs yesterday. And then, because it was one of two things, see the consolidation, but because we were looking for a summertime low, I was saying to you, the market's going to take out those highs. And that took place yesterday. Volume behind that move, by the way, was 28 million shares, and that was taking out 15 million shares the last time up on June 24th. Pay attention because I'm talking about the word volume. We're going to have to carry over into the next segment for sure out here. But today, if we just take a look at it, nice volume inside the move, 22 million shares to the upside as we speak right now. The Qs, it doesn't mean it's going to hit there Monday or Tuesday, but the Qs, as long as they stay above 111.16, remember, I can't control the market. What I can do for you, a really darn good job, you thought I was going to say something else, of reading exactly what the market has done and what it should do from this point forward. And what it should do, what the Qs should do, is get up to that $116 level. That's equal to the consolidation breakout. Maybe it's going to do more than that. Now, many of you out there are going to look at me and say, but the market is going up on light volume. Aren't you? I know. I can hear somebody, not all of you, but I hear somebody out there is saying that. You know that I have shared with you in the past that the Qs make a bottom with what? With large volume, right? It's a unique pattern that the Qs have unto themselves. And it's really important for you and I to study that. Let me just switch gears here just for a moment. I think this is important for me to switch gears. I'm going to have you, hopefully you're watching on Tiger TV. If you're listening on the radio, your mobile device at TFNN.mobi. Thanks so much for doing that. Remember to go back and check out, because this is going to be one of those memorable shows. One of those shows that, as one of my listeners says every now and then, says this is must-see TV. Now, if you were looking at a chart like this, what would you be saying about a chart like this? This is a red line that from the upper left, I'll describe to you if you're just listening in, to the lower right, is on a significant downtrend. Most people might think that this looks like oil, or it looks like something there, or it looks like grease, or who knows. But this is from an extreme high up on the upper left down to the lower right. I mean, it's pretty severe. Would you say that this has lost its mojo? What would you say about this? Now, what if I suggested to you, because I want you to think about this during the break, what if I suggested to you that this is the volume of outstanding shares by day in the QQQ ETF? You know how you measure volume, and you're just comparing volume to what took place yesterday? Well, if you're going to go ahead and compare volume to what took place yesterday, or if you wanted to go back, in this case here, this chart just goes back to January 2014, don't you think you should be looking at the percentage? There's fewer shares. If there's fewer things to buy and you have the same volume you did back then, isn't volume really increasing? Something to think about. This is Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow off 69, S&P's down 2.5. Let's go out to Fort Lauderdale to Max. Well, we're going from one end of the country to the other, from Maine to Fort Lauderdale. It's a beautiful thing. Max, how you doing today?
Good afternoon, Steve.
Good afternoon to you.
Oh, are you up in Maine?
No. Previous caller during the first segment, Stanley. He was calling from Maine, so we have the East Coast covered. Now we got to get Garo from California to call in, so that'll take care of our Southern California area, and then we'll just have to get somebody from Northeast.
Okay.
Northwest. I'll get my directions correct.
I just got home, so I missed the first of your show.
No problem. So tell me, Alibaba, you want to take a look at? Tell me what you're doing, how I can help you.
Well, I've been short since around 92, and I just wondered if we found a bottom in it. And how about the Shanghai? You think China is bottomed also?
You know, that's going to be certainly a more difficult. The Shanghai is a more difficult question to answer, only because, you know, now it's like it's not fair. It's you against the Chinese government, I think. And I don't know that I want to take them on. We'll go take a look at it. But let's try to answer Alibaba. So you're short Alibaba, and what it's done today, it's confirmed an A to B equals CD to the upside. So it's just a small one, but let me give you what that price projection looks like so that might assist you. There's a couple things that Alibaba has done as of 135, and we really won't know until we see how today's close finishes. But if in fact Alibaba today closes above 82.94, that's not something that you want to see. There's two things that will trigger. At above 82.94, you've gotten above a resistance area of our TAS market profile. So that's just kind of a natural traffic area. It says, hey, you shouldn't be short if price closes above that. Simultaneously, at the same time, that's crossing a B point, a swing point from July 13th that had 10.3 million shares. It's already got 9 million shares. It seems to me there's enough time left to confirm an A to B equals CD to the upside for you. And that would give you a price projection of 86.20, a minimum of 86.20, maybe 87, 83 out there. So if you're short from the 92 area, I would say consider closing. Well, it depends on whether or not you want to take that kind of pain. You've got to make that decision. But it says that the price projection is, it's more likely than not, price is going to get up to 86, 87, 89, somewhere right around there.
Okay.
Does that help you?
Yeah, I think I might close the position today.
Now
Let
me just take a look at the weekly chart for you, too. Now, there's a big hammer candle that took place on July 7th inside of Alibaba, just like much of the market. And that was your first indication that it at least had found a bottom. Is that the final bottom? I don't know. But it had at least found a bottom. And if we take a look at, just curious what the weekly chart was doing at the same time out there. And the weekly chart was testing that same swing point area, which was the week that began May 4th. That had 178 million shares, and it was tested with 99. So you have a real rejection, at least at this stage of the game, inside of the Alibaba chart. You have a rejection of a swing point on price and volume, and you now have a confirmed A to B equals CD, the upside in the daily chart. Weekly chart says 89.87 would be the number that you would not want to see it get above, close above.
Okay, how about Shanghai?
Shanghai. If we go take a look at the Shanghai out here, are you still short the Shanghai?
No, I'm just looking at it with Alibaba.
Yeah. So if I take a look at the Shanghai for you, let me see what this thing did here last night. We've got the Shanghai was up 140 points, 3.5% out there. I just don't know the answer. There are many people out there, and I'll defer to them, that will go back to historical and say, look, just because the government says they're going to step in and they're going to do X, which is support the market or put guns to everybody's head to support the market, that's going to stop things from that's going to stop things from moving to the downside out there. And they're all over the place telling us that, and I have every reason to believe they're right, with the exception of this is not like something that's going on in the U.S. This is a communist government that that basically is controlling things, right?
How long did they put a restriction on shorting more than 5% share?
I think it was 6 months. Oh, I don't think they can sell anything if you are a 5% more. If you own 5% of any individual stock out there, I think you are.
Did they put a time period on it?
I think it was 6 months, but I have spent time in China. I used to import product from China, millions of dollars worth of product for a business that I own from China out there. I've been there. You don't want to be messing with that government. So I hear what everybody's saying, that just because this is what they want to do, that it's not going to stop the free fall out there. I think you got to keep things in perspective. And so my suggestion would be, hey, play Alibaba. Don't be trying to get in front of the Shanghai to figure out whether it's still going to fall, or I wouldn't trade Shanghai in either direction.
Okay.
That's just for my advice, and that's from my experience and so forth over there. So those are my thoughts. All right, my friend.
Yes. Thank you.
You betcha. That was Max in Fort Lauderdale, and I've spent I have some thoughts on China, but I will save that for another time. I want to go back to the other chart that I showed you. I want to put that up on my screen out here. because we were just simply going into break. And I think it's really important because maybe you didn't catch it. But if you take a look at this chart out here, now this chart that you and I are taking a look at, just so you understand, this chart here, most people don't even understand this basic concept out here, is that the number of shares that are outstanding in the QQQ series ETF, that changes every single day. Every single day that changes. And this is just simply showing you the exact change. I'm only just showing you the change since January of 2014. So this is by day outstanding shares for the QQQ series. And when you take a look at that, that's pretty significant, is it not? Now, when you are a person that is focused just on volume, and I'm not saying there's anything wrong with that. I just answered questions for our listeners here and taking a look at what is a stock doing against a swing point. We should always do that because it's revealing information to us. But we shouldn't just stop there, right? You should not just stop there. There is more information. That's the cool thing about the world that you and I live in, is that the amount of digital data that we have, if we go mining for it, you'd be amazed at the nuggets that you and I can find out here. So when we are comparing and we're benchmarking, right? If you own a company and you are running out of product, are you going to raise your prices? Do you need more volume, in order to do the same? No, you don't, folks. You just simply don't. Here is the QQQ series volume or outstanding shares, right, inside this ETF have been moving to the downside big time. And I can go back and give you other charts out there. But there's even something that's more important here. If I show you this chart, let me do this. Let me go to a different workspace on my system. I just began working on this chart here. And I'm not doing it to prove a point or anything, but I'm doing it so that it can assist both you and I with regard to what goes on in the market, mostly my newsletter subscribers, okay? They typically only get these morsels. So this is Fantastic Friday. I'm giving you a piece of fantastic information and maybe a different way for you to look at the market out here. This here is taking a look at the actual volume by day, and I'm comparing it to the outstanding shares out there. So I've got a routine that goes through and calculates that and computes that. And what I'm trying to do right here is I'm trying to identify the threshold level where we identify where based upon that percentage, the market makes tops and bottoms out here. With regard to bottoms, it's really relatively easy, but I still want to go back and historically take a look at this. The black lines on my screen out here, you can see those are the bottoms, and the blue line going across the very bottom of my screen out here, what you can see out here that when price gets above, or when that percentage gets to that or above that level, that has marked, that's marked, for the most part, that's marked bottoms. There have been a couple of failures here. This goes back to August of 2014 out here. This blue line, they're what we'll call sort of failures out here, right? They did at least mark a very short-term bottom, a one-day bounce that took place, but there was probably something else that was going in there. But when we take a look at these volumes, folks, inside the Qs are never, I won't say never. That's incorrect. That is an incorrect statement. But don't expect the Qs to get back to the October 2014 level. That was a significant bottom out here. Just as I believe the January bottom inside our market out here, which really took place in February. It usually takes place in the end of January. In this case, was February the 3rd out here. That bottom's likely not going to be seen in 2015 as well. I'm more comfortable with the October 2014 bottom. But the black lines that you're looking at on my screen, this is comparing volume to really what's in the store, right? Outstanding shares out there. Likewise, you can see the tops when the reverse takes place and it gets down to the bottom threshold line. That identifies where tops have taken place. Now, I can't update this on a live basis, so I don't have today's data in there. So I can't tell you where in the threshold level we are. Newsletter subscribers will know that Monday morning. You could know that Monday morning and have more details about this. It's a pretty simple thing to do. You go over to the homepage at TFNN.com. You sign up for Mastering Probability. You can test drive it for 30 days. It becomes a pretty easy thing to do out there. And certainly this is going to be one of the charts that we'll take a look at because it provides us with such great, accurate information, whether it's short-term, intermediate term, long-term out here, such great information with regard to what it is that you and I can anticipate in the market. So that there was a freebie, probably opened up your eyes to something that you didn't realize, and is another way for each of us to go ahead and take a look at volume. If we take a look at what is going on inside the markets as well out here, we've got a bit of a retracement. Boy, that's nothing to be surprised about out here. The Dow is the weakest. I find that to be be the most interesting. When I say it's the weakest, he's got 68-point pullback out here. The reason why I say that is of interest was really because what you and I know is the Dow is the one that has given us, the Dow and the NDX 100. The NDX actually did it. I take a look at these price oscillators here. The NDX I have to calculate by hand, and a couple of days ago that gave us that got up to the level of initiation of higher prices to come. It's not a one-hit wonder. It's not a one-day wonder out there. That's not what the message was. And that just added to the message that was already out there. And inside the Dow, the price, it's got to that extreme. If you just look at oscillator readings, it got to that extreme over bought. The pullback has been pretty minor out here. And so long as this oscillator stays above the zero line out here, maybe the buy area is going to be when that gets down to the zero line, rejects that, and moves higher. What price point is that going to be? I can't tell you. Not that I won't tell you. I would if I could. I just don't know what that is. Maybe it's 17,877. Maybe it's 17,720. Maybe it's just today. Remember, yesterday we took a look at markets that just simply don't let you in. This could be it for all I know out here. There are a couple of sideways moves, but the market's going to move higher out here. If we take a look at the NASDAQ composite now, and also what was nice about that oscillator reading inside the Dow, we got a higher high reading yesterday above that 2.5 level. That's always very bullish and very positive out here. Doesn't tell you when and how you're going to get up there, but it does help you to identify and navigate what's going on inside the markets out here. Pullback, a little bit of a pullback actually, tells you that there's, a little bit of problem underneath the market with regard to many of the issues inside the NASDAQ composite. But maybe that next reading is right at about the zero level as well inside it. New York Stock Exchange still very bullish, just simply moving. Now, it did not get above that 150 level yesterday. Boy, was it close. You talk about a flirt. 148.30 was the reading. And so maybe this is just simply going to pull back into the zero line out there. Look, if it gets below zero, we'll assess what that means at that stage of the game. But at this stage right here, it is the bulls that are in control of the market. Short-term trading, that's a whole different thing. You're actually not even going to pay it. Well, you would pay attention to this from the standpoint of wanting to trade in the direction of the trend out there. If I take a look at, there's a question, what's going on with the IWM? Where is a buy point with regard to IWM is the question out here. Let's go take a look at it, see if we can come up with something. See where that is trading into. If you look at the IWM, one of the buy points out here, I believe, took place earlier today. Now, this is a weekly chart. Let me get the daily chart out here. Not that there's anything wrong with the weekly chart. Let me get rid of retracements. Okay, no, it passed that potential buy point here. Well, give me a moment. There we go. Okay. So with regard to the IWM, if this is what you really want to trade out here, the areas to be looking are right around the 125.20 area. That's going to be our the two moving averages on my screen are 8 and 13 as we speak right now. So you can see they're both basically, they're kissing cousins as we speak. If price can hold that level, that might have been a buy point. Certainly you've got the IWM pulling back on light volume today. If this area fails, you would expect I would expect the IWM to actually get back and test probably the top of this hammer candle out here from the trading day of July 7th. You've got your point of control that's just slightly above it at 124.29, and the top of that hammer is 123.99 out there. But it may be, this 125.20-ish type area, and that's what it looks like as we speak right now inside of the Russell 2000. Not saying you shouldn't take a long trade there, but you might want to look at something that's a bit stronger out there. This is Steve Rhodes with TFNN. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's off 71, S&P's off a couple. Let's go up to the home of chicken wings, right? The Buffalo chicken wings. Let's go to Robert in Buffalo. Robert, how you doing? Is that where chicken wings were invented? I guess it would be the I don't know, started, formed, created.
Yeah, we started chicken wings at the Anchor Bar.
The Anchor Bar.
The Anchor Bar is where they started. Yes.
Oh,
and,
that's
it's sort of taken off around the country, actually around the world.
Yeah.
But anyway, home of the roast beef on Kimmelweck, too.
Ah, I've had that before.
Those are wonderful.
Yes, they are. Yes,
and
they
we're
are.
also home of the next Super Bowl champions.
Hey, there you go. I like to hear that. That's great. That's great. All right, you want to take a look at JetBlue. Tell me what you're doing, how I can help you.
Okay, I own 400 shares. I bought in about $15.20.
Oh, congratulations.
I think the airlines are starting to scare me a little bit, though.
Okay. Well, so
I'm
what's
wondering what
your
I should do.
tell me what your question is, and then I'll try to help you.
Should I? I don't have a stop in for one thing, so my one question would be, where would I put a stop?
What I would do is, so let's take a look at JetBlue. Let's see first what it's doing, where it's headed to. And while we're doing that, I'm going to also go ahead and give you something to consider for a stop. And one of the things to consider for a stop out here is understanding what the average true range is. And that's just simply the daily movement with inside JetBlue on average. JBLU, folks, is the ticker symbol out there. And on average, JetBlue moves 60 cents a day. So your stop should be 60 cents times, in my opinion, some factor. Some Fibonacci factor, 1.272 or 1.618, and you can keep adjusting that stop. I would maybe make it, 60 cents times 1.272 or 1.618, whatever that is. Say it's 90 cents. Let's just call it $1 for our purposes right now. Below the close. Each day out there. Maybe you don't continue to let it to let it keep backing up, but you come up with some. If price continues to rise, you just simply go ahead and you just raise that stop and give you a trailing stop. Where JetBlue is likely headed to, and by the way, nice trade there, Robert. It completed an A to B equals CD to the upside yesterday, and it's trading right at that level, which is 22.80 is that price projection. Now, ABCD patterns complete one-to-one patterns, which is what we're looking at right now, 60% of the time. That means you've got a 40% chance here that price is going to move up to the next level, take it to the next level. And that next level for you would be 23.69. It looks to me like JetBlue, it wants to get up to 24.59. 24.59 is actually the bottom of the swing point that takes you all the way back. Its all-time swing point high on its monthly chart out there. And that is what it looks like it wants to do, is get back up into perhaps that level. But look, you're nervous, and you should be nervous if you're not using a stop. So the first thing I would do is get a stop in place and let the market tell you what it wants to do, so that you've protected your profit. It looks to me like JetBlue wants to get up into that 24.59 maybe, and if it closes above that, there's no reason why I can't get to 31.43 up and away. But it's got to be one thing at a time, one day at a time. I don't see anything wrong with it as we speak. Right now it's up above resistance that I can see. Okay. Does that help you?
Yes, it did. And I actually heard on yesterday morning, what's the guy's name after Logan?
Larry Pesavento.
Yeah, he had a fellow on there that said the airlines are dead. They're a dead deal.
Well, they may be, but JetBlue's not a dead deal. Looks like it's headed to the 23.51, 23.69 area next. My friend, the show is over, but thanks so much for calling. You bet. Stay tuned, folks. David White is up next. Have a great weekend. See you Monday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.